Hey everybody, welcome to Korean Atlanta Mentorship. So, do y'all know the Kwok brothers? They heavily promoted velocity banking back when it wasn't cool, and I think they had sold a lot of services related to velocity banking, and then later rebranded it to accelerated banking. But you'll notice that if you type in Kwok brothers velocity banking, you cannot find that term in their YouTube channel anymore, right? So here we have accelerated banking scam exposed Kwok Brothers, but you'll notice that that term is now in someone else's channel through the, I'll say, memory hole. But you'll notice it doesn't say velocity banking or accelerated banking anymore. It just says paying off your mortgage with a HELOC. How does it work? And then HELOC to pay off mortgage. So what happened? Well, basically, the government, the state of Illinois, actually cracked down on the term velocity banking. So if you don't know Accelerated Strategies or Novo Elite Incorporated, those are entities essentially controlled or owned by the Kwok brothers, right? And how do we know this is because if we just kind of look here, um, you know, Accelerated Strategies LLC, Accelerated is a wholly owned subsidiary of Novo Elite Incorporated in Illinois Business Corp, which transacts business under the name Kwok Brothers, right? Kwok Brothers YouTube channel. And so this is from the Illinois Department of Financial and Professional Regulation Division of Banking. And this is public information. I just found this through the government website through a simple Google search because I was wondering, like, why don't I hear the term, velocity banking from their YouTube channel anymore? And that's because they got hit with, I think, a cease and desist. Is that, am I saying right? Cease and desist. Yeah. And basically, what the state of Illinois did not like is using the word banking in connection with their businesses, including the use of the terms accelerated banking and velocity banking to describe and promote certain aspects of respondents' financial education and consulting services. And so, luckily, I don't sell velocity banking services. I just sell educational products, and I tell you that I'm not going to help you do your thing, right? And there's a reason why, like, you kind of have to be careful of anything related to finance, banking, and because those things are heavily regulated, which is why I never offered a service related to that, right? And who knows, maybe in the future I might do it, but it's probably going to be compliant, and I probably won't use the term I'm offering a velocity banking service because, and I know I don't live in the state of Illinois and have nothing to do with the state of Illinois, but this is just one example here where if a government regulator sees from their point of view that you're doing something wrong, and they're going to say, hey, you used the term bank and you're not a bank, right? Um, hold on. So in 2025, the division commenced an inquiry of respondents for apparent violations of Section 46 of Act relating to the respondents using the term banking in connection with their businesses. And so basically, the complaint is that they're not a bank, but they use the words bank, banker, or banking in connection with the business without prior approval of from the state of Illinois. And then it says, at all relevant times, neither Accelerator nor Novo Elite was a bank and neither had a license or authority to operate as a bank in Illinois or any other jurisdiction. Additionally, neither Accelerator nor Novo Elite has received a division's approval to use the word bank, bank, or banking. So you cannot use those words in connection with your business in the state of, especially in the state of Illinois. I don't know about other states. I'm not a lawyer, right? But yeah, and they have a lot of information about the Kwok brothers here. So I'm just gonna scroll down and quickly go over this. And so basically, luckily there are no criminal charges. It's just a civil penalty. And I heard the Kwok brothers made millions of dollars selling, velocity banking services. I don't know if that's true or not, but maybe this is one of those things where it's like, that's the price of doing business, and they just won't do business anymore. But they did have a civil penalty of $20,000 and in 5 payments of $4,000 each, right? So in 2026, so this is very recent. This is very recent. In fact, the last payment was due today. Today's April 15th. Okay. So it's crazy, right? It's crazy. I can't even sell velocity banking services. I have to call it something else than that, and I can't even use the word banking. I don't know what to call it because really, what am I teaching? Basically, you don't save money, but I'm not a bank. I think I have to like make that as a disclaimer. I am not a bank. I am not a crook, right? It was that former president Richard Nixon. But basically, the Kwok brothers did cooperate, I believe, which is why they don't say the word velocity banking or accelerated banking. They don't use the word banking in their YouTube channel anymore, right? So this is what we're gonna do. Luckily, I don't sell velocity banking services, so I don't think I can get caught. But I don't know. Maybe who knows? Government regulator might come down on me and give me a cease and desist. I have nothing to do with Illinois law, but yeah, might happen in the future. And so here's Sam Kwok, Daniel Kwok, and then this is the government regulator who went down on them. And scroll down, scroll down, scroll down. And basically, this is their when this happened. So this happened really recently, end of 2025. Oh my goodness. Right. Oh, wow. Anyways, so that's why I kind of put in the thumbnail velocity banking is illegal, but I don't think it's illegal to demonstrate it, right? I'm just not selling any services or have a website connected to Velocity Banking. In fact, I tell you that I'm just selling cult memberships. Okay, like I literally have told people that I just recruit people into my cult, and this whole Velocity Banking thing is just an excuse to recruit people into my cult. And I don't think it's illegal to recruit people into your cult. It may be illegal to charge people services for Velocity Banking, according to the state of Illinois. I'm not a lawyer, so I can't tell you what's illegal or legal or illegal, but I don't think it's illegal to recruit people into a cult. So as long as I'm not doing anything illegal. Anyways, all right. So as I said before, it's my belief, and I might be wrong about this because I'm not a lawyer, that it's not illegal to just demonstrate velocity banking. Just how when you go to Costco, they demonstrate food samples. That's not illegal either, right? But I don't charge for it, and I don't think I ever have. I've just distributed some educational packages here and there, but I never said, "Hey, I'm your velocity banking coach," or whoever, right? All right, well, let's go ahead and demonstrate velocity banking. And should I use the same scenario? I mean, 16 grand a month. Wow, that's pretty good, right? What was I doing? Oh yeah, I was like demonstrating like a scenario I saw on the Dave Ramsey show where someone was making like 200,000 a year, and 200,000 a year divided by 12 is like 16 grand, but we're assuming that the 200,000 is after tax, right? So, or yeah, but if it's before tax, you make 200,000 before tax, then I think that'll be like what, 10, 12 grand a month. I don't know. Okay, so let's go ahead and do the scenario again. So, one of the things I always tell you is that who is the bank's favorite target, right? The bank's favorite target is not poor people because poor people don't have money. So, they want rich people who don't need money, right? People who make good incomes but don't need money. Why is that? Because people who don't need money um, are perfect candidates for debt. Because the way that the bank thinks of their ideal customer is like a vampire. A vampire needs people who have blood, right? People full of blood. And if you're someone who has no money, that's like no blood. But if you're rich and you have no debt, that's like someone who's circulating with blood. See what I mean? Like a bank is kind of like a leech. And so, a lot of people don't think it's fair that, banks don't lend money to people who need it. But if they do lend money to people who need it, think about 2008, 09, where the entire economy crashed because of the housing market, because people were just giving loans to people who need money. Remember that? Yeah. It's the reason why you don't do that. So basically, if you have too much money, then the bank will target you with all of these ads for debt, credit cards, right? Uh, Loans, mortgages, right? You're the perfect candidate. And then eventually you'll get to a point where you have so much debt that the bank has drained you of your life force. And so now you're freaking out because you make 16 grand a month and you only have $1,200 left over. Okay? So now what do we do? Well, we're going to do the thing that with velocity banking that most people would freak out about, which is not save money. Like all velocity banking is just not saving money rebranded. So if it's illegal to say the words velocity banking and offering a service, I just got to call it like a rich people cult. You know what I'm saying? Like if I say, "Hey, I'm offering a rich people cult service," then I think I charge a lot of money for that. And the Department of Financial whatever is not going to come after me, right? But I would say, "Hey, I'm offering a high ticket velocity banking service." I think the state of Illinois will come after me because they're saying, "Hey, you're saying you're using the word bank so people could get confused and you're not a bank." Okay? So we got to be careful here. This is why I can't sell velocity banking services. You know what I mean? That's why Kwok Brothers got in trouble. Yeah. Accelerated Strategies, Nova Elite, DBA, the Kwok Brothers, man, they went hard on them, right? I don't know if you could say they went easy on them because there's no criminal charges, but a lot of times, you know, you just don't want to get in you just don't want to deal with the government. Just be compliant, you know what I mean? So, anyways, all right, so let's go ahead and do this. And so here's what we're going to do with velocity banking. Okay, let me go ahead and show you what to do. You got to create a budget. Why a budget? It's because your budget is your debt attack plan, right? You list your income, you list your expenses, you list your leftover checking savings, and then you create an expense breakdown that lists every single debt that you have, every single debt as a line item and its own payment, okay? And so we've done that here. And then on the last line item, what you do is you list your general expenses, things that are not tied to debt, right? Gas, food, insurance, all the good stuff, right? And so one of the misconceptions about velocity banking is that people don't understand it's a debt payoff strategy. They just hear the words velocity banking, which is a really cool term that the state of Illinois has says, hey, we might, you might confuse people that you're a bank if you use the term banking. But all it is, okay, is just about paying off debt, right? Using all your money to pay off debt. A lot of people think like, hey, if I make $4,000 of income and I have $4,000 expenses and no debt, could it apply to me? No, because it's a debt payoff strategy. Okay, so what we're going to do in this velocity banking side is we're going to have the same income, same expenses. Okay, and then we're not going to save money, right? Because again, velocity banking, if you deconstruct the reason why it works is you're just not saving money because you're putting all of your money into debt and then you're using a line of credit to help manage your cash flow. Now, I know you're looking at this, especially if you're looking at this for the first time, you're thinking, well, this checking and savings number that's left over is the same as this cash flow number, right? And that is true. That is true. Now, for demonstration purposes, we're going to assume that we have access to a line of credit. Okay, so what's a line of credit? It's basically a financial tool where you can borrow money, pay back, and then use it over and over again. That's what a line of credit is, right? So there's personal lines of credit, business lines of credit, home equity line of credit, right? And you just click a button on the bank's website and then they just dump money into your checking account and then they charge you an interest rate. So in this example, we'll say 8% because that's typical of a home equity line of credit. You have to be a homeowner to do this. Basically, you're using your home as a credit card in a sense, right? And so, yeah, so what we're going to do, okay, I'm just going to show you right here what we're going to do is we're going to first calculate something called the cash flow index. So what is a cash flow index? It's basically a formula, right, of the debt amount, so 5,000 divided by 175. The debt amount divided by the payment. And what it does, it gives you an arbitrary number. And then this arbitrary number right? Okay, what does this mean? You think of it as a sorting or ranking system. The lower the number, that's the one you want to pay off because you get more bang for your buck in terms of cash flow for paying off the debt, right? So this is kind of unintuitive. So because most people focus on the interest rate. Now, there is a correlation of the interest rate and the cash flow index, but it's somewhat indirect, okay? Now, if you take a look here, this is the biggest number. So what does this big number mean? It's that it's inefficient to pay off that debt first, right? So I literally, if I want to pay off the mortgage, have to give someone $400,000 to only get $2,400 back in my life, right? $400,000 to get $2,400 back in my life, right? So, but I could give someone $100,000 and I will literally get double that amount. So it makes more sense to pay off this 100,000 than this 400,000 in terms of my cash flow, right? And so that's what we're gonna do. And let's just assume. So let me just recalculate how much credit card debt we have. So 5, 8, 15, 27, 37, 10, 35, 12, 15, 100. And then I'm just going to go ahead and do this. And it's 264,000. All right, 264,000. So what we're essentially going to do with that credit card debt is do a balance transfer. Balance transfer, right? So if I move the credit card debt here, 264,000, and we take the low cash flow index numbers, in this case it'll be the credit cards, and then move them into the line of credit, and guess what happens to the payments here? Oh my goodness, right? It's zero, all the zeros, because we just essentially did a balance transfer. But here's the thing. No, if you have $1,200 left over, the bank ain't going to give you a free and clear line of credit to transfer your debt. Why? Because banks don't lend money to people who need it. Remember that, right? When's the best time to get credit? When you don't need money. If you need money now, banking is going to turn you around because you have to think of it from their perspective. Like, who's the best candidate? Oh, people who don't need money. Who's the best candidate for a vampire? People with lots of blood, right? Bank is a leech. The bank is a leech. The bank's a vampire. Okay. All right. So now what you do is the final step, which is put your entire paycheck into the line, take your expenses out, and then rinse and repeat over and over again, right? So you see here that magically we went from $1,200 a month to 11,000, making the same income and just shifting some expenses, right? It's kind of like doing a magic trick to fool you. So eventually you could pay to join my cult. Again, I'm not selling Velocity Banking Services, but I may sell you to join my cult. Okay? You got to remember that. All right. So okay, so now let's do this. And what we're going to do is we're going to take the previous month's balance, previous month's interest, and then subtract our cash flow. So 11,029.4. And then what we're going to do is calculate the interest, which will be based on the average daily balance multiplied by the interest rate and then divided by 12. And then copy and paste, right? So copy and paste. And then we see that by month, what month are we at? 27, we have all of our debt paid off, right? So month 27, we have their debt paid off, and how much is that? That is 264,000. 264,000. So let me copy and paste. Okay, and then now what we're going to do is we're going to go pay off these two. So we got the auto loan, the mortgage, and luckily we got the loan calculator right here where we just got to put in the current month. So the current month is 27, and then spits out the current balance, and then we use the cash flow index indicator again to figure out which debts to pay off. So what I'm going to do is just move this 17 grand into the line of credit. Let's go ahead and do that. Copy and paste. 17054.53. And then you see that in 1 month it gets paid off, right? So let's go ahead and update the cash flow, which is this is going to be 0. And then that's going to be $11,568. So regardless of if we update the cash flow or not, it's still going to be paid off in 1 month. And then we see that in month 28, It's going to be 294K. And then the mortgage here says 400,000. So now we got to figure out what's the balance here? 388,064.08. And so we have two options here, right? So first option is just this is the most basic obvious option. I call it vanilla level, um, paying off your mortgage early, which is you make the monthly payment and then dump the entire cash flow as an extra payment as to the mortgage, right? Very very simple. Now it's not simple in practice, and I'll tell you why for the average person. And this is like pure psychology, right? Like Dave Ramsey talks about this all the time, that how like most of your money habits is pure psychology. If you dump that 11 grand in from your checking and savings, and I'm talking about the average person, I'm not talking about, most folks on these videos. You pay 11 grand into the mortgage, it's almost like you lost, because now you don't have that 11 grand anymore. And that's not really true, right? Because you can always use these credit cards as backups, but people get confused because there's a phenomenon called segregation of income, which means that if money comes in, then it gets split all over the place, right? It gets split all over the place, and that you're essentially making minimum payments on everything. Segregation of income is how the banks make money, and minimum payments is how the big banks make money. Like if you look at your mortgage payment, think of it as like the minimum payment every month. A lot of people don't think about that way. They think, oh, 30-year mortgage, that's just the monthly payment, and I'm not supposed to pay more than the monthly payment. And when you don't pay more than the monthly payment, the bank wins, right? So, and how do you know this? Well, if you just look at a 30-year mortgage and take it to the final month, which is 360, 30 years, look how much interest you pay. So the price of the home that you paid for was probably a little bit more than 400, because you make a 20% down payment usually. So let's say so, but let's just kind of look at this: 400,000 balance. So that was the original loan balance. So not only do you pay the 400,000 after 30 years, you pay an additional 463,000, meaning you paid like two times a house, right? Like there's a reason why they don't want you making more than the monthly payment. Okay, but it feels like psychologically that you're losing money when you make these overpayments. So how do you kind of get over that fear? Just move some of the loan into a line of credit and just keep dumping all your money into a line of credit. We call that chunking, right? So if you take a look here, I think I've already filled out the details. So this is the velocity banking chunking calculator that I got a long time ago. Um, and basically, you fill in the details here. You say chunk amount. So this should actually be 8%, because that's the home equity line of credit. But what I've demonstrated, and you put your monthly income, your expenses, and um, everything except for the loan you're trying to pay off. But take a look at this, right? So this has a 2.5-year projection of your loan being paid off. And a lot of people like freak out about the interest rates, right? The most important thing that you can get from this calculator, in my opinion, is that you pay off the mortgage last. Like if you pay off the mortgage last and you maximize this income minus expenses, you'll be fine. And if I do 30%, okay, you'll notice that the interest rate, or the interest paid, is about 6 grand more. 6 grand more, right? So I look at this: 31 grand if it's 8%, and if I do 30%, then it's about 6 grand more. So if I do 15%, it's only like 2 grand more, right? So a lot of people don't like, they freak out about the interest rate, but really the interest rate only matters if you just keep holding a balance and you're not dumping all your money into the debt tool. Okay? Like hopefully that makes sense. And if it doesn't, then you know what? Just use extra payments. Right? Like if this works for you, like then just do that. Like there's not a problem with that, because you'll pay it off quickly. You see what I'm saying? Anyways, all right. Well, that's it for today, folks. So I guess this might have been illegal. I don't think it was, in my opinion, because I did not sell any velocity banking service. Um, if the state of Illinois or any other state banking institution is watching this, yeah, like hopefully I don't get in trouble, right? I know, and here's the thing. I've actually been looking up some laws. Like, do I need a license to counsel people on debt? And I know the state of California is usually like really strict on many, many things, but I read in the state of California, you don't need a license to counsel debt unless you're actually handling money. That's what I read. Yeah, so take a look at that. So it says, so let me scroll up in this one. It says you generally do not need a specific state license to be a debt counselor in California if you do not handle client money, pay debts on their behalf, or settle debts, right? Um, However, you must register as a credit services organization with the Department of Justice if you charge fees for advice. Hmm. So now I definitely should not charge fees for advice. I really need to just charge people money for joining a cult. Hold on, let me just do this. Is having a cult illegal? Yeah, cults are not inherently legal in the United States. So I think I'm gonna, I honestly gotta create a cult, right? It's not illegal, but apparently velocity banking is. All right, well that's it for today, folks. Have a great day, and have a what should I can't even think anymore. I was gonna say write in the comments below if you love this and tell me that you want to join my cult. Don't talk about velocity banking. It's illegal now. All right, have a great day, and I'll see you all on the next video.